Hello and welcome to Cash Furnace. My name is Paul Konzerski, and together with my co-host Eric Downs, we aim to become your go-to source for daily stock and crypto market news. Today, we are joined by a good friend and editor, Chris Wagon, who also happens to dabble in both of these markets. Today, we cover Signals, SIGL, false meteoric rise, thanks to Elon Musk's tweets and a whole lot of people's misunderstanding. What we're going to do about it, how we're going to learn about it, etc. In the crypto side of things, we cover today's big crash, where we think it's going, should you be taking profit, should you be panicking, and potentially where Bitcoin is headed for the future. Let's get into today's news in stocks and crypto. Eric, if you wanna go first, I'll kind of end it with the crypto segment and why everybody shouldn't be panicking, like they seem to be.
Oh wow! What a great tease!
What a cliffhanger!
Let's see. Is there I mean, the only thing there were some some big stories that came out after hours yesterday. There was the whole thing about, or was the weekend about Neo and Nvidia linking up on a project. That's cool. What I really loved though, that I mentioned to you guys today was the fact everyone blowing up SIGL after Elon tweeted use Signal. So for anyone who doesn't know, Signal is an encrypted messaging app, and I guess in the wake of all of these social media, of this how do I say, all the
social dilemma age.
Yeah,
information.
Everyone's banning Trump, Parler's off Amazon web servers, and Elon's just like use Signal. And Signal, as far as I know, is not publicly traded. But there's a company called Signal something or other, ticker SIGL.
I think it's Signal Advanced or something.
Yeah, I think you're right. And it went from like an average price of like 5 cents, which it's been at since basically the dawn of time, up to like $70. Oh, I love when that stuff happens, man. It's like, I remember that same thing happened when Snapchat went live, and like everyone bought the wrong Snapchat. Dude,
what ticker was it instead of Snap?
I think it was, man, you know what? I have to be honest, I don't remember what it was. But
that's funny.
Yeah, that was a classic, dude. And it's like far from the first time I've heard this story, but I love when that happens, because it's just like, I always like to think of the stock market as this sort of I don't want to say it like higher level investment vehicle. The people who hang out or trading stocks, like they're doing research, and we're charting, and we're looking at fundamentals and S1s and all this stuff. And no, it can be just as stupid as someone as people
frozen
aping.
There we go.
Aping into a stock because they think they got the wrong name, but they just don't want to miss out. It can be that stupid, and I love it for that reason.
So the funny thing was that I found, at least, is you would think that sort of meteoric rise with something that wasn't even a publicly traded company, was the wrong company. You would expect something like that to be traded through all the new Robinhood investors this year.
That's what got me too, Paulie.
All of the new money that doesn't really know better, who's just trying to make a buck.
Right.
But that's not even available on things like Robinhood, on Webull. There, you can't trade those penny stocks.
That's why I asked Eric today in the group chat, like, how much money really was put into this to make it go up that much? It must have been, I would hope something minimal, like on the grand scheme of like daily value. But
I mean, what I wonder is, because this is not the first time this is, well, man, that's tough. Because like, for instance, when Snap IPO'd, everyone knew the day it was IPOing. And so I wouldn't be surprised if some slick traders out there found the wrong company and just picked up some shares real quick, or whatever, picked up some shares real quick, knowing that a bunch of idiots were going to jump into the wrong stock. But the thing with Signal was like, it was an Elon tweet. there's no launch date on an Elon tweet. It just comes out, so like
Right.
maybe there were some slick people in there who got on and rode the ride knowing that they were being fueled by morons, but I would bet the majority of them were just the morons.
Yeah.
And we all know how it goes with pennies. When a penny starts taking off doing 50, 100, 200% in a day, it just starts spreading around all the forums, all the discords, all that stuff. And everyone wants to jump on and without even knowing what it is and take the ride. And I bet that's all it was. And it just reminds us that this amazing, incredible exchange that is backed by that is, how do we say, underpinned by so much unbelievable, like, state-of-the-art technology is still just being operated by a bunch of freaking chimps.
Okay.
You're not wrong, man.
Yeah.
So I'd be interested to think now that it's so damn high, obviously we're going to tank once the news comes out that everybody bought the wrong company, right? And you mentioned it briefly in the chat.
I've been seeing these headlines for 2 days.
It would be a massive short opportunity. But again, you mostly trade Robinhood, so you don't have the opportunity to do so. Would it be possible through other investment apps such as Fidelity or something like that
TDA
to make a short? Right. So are you looking at shorting the stock?
I'm thinking about it. The thing is, I've never shorted stock before. Like, right. I've synthetically shorted, but with puts or something like that. And even that I do extremely rarely. But
right.
I've never actually sold stock short before. And I'm wondering, I mean, I looked at the spread. I mean, I'll bring it up again real quick. I looked at the spread on this thing, on the bid ask.
Share your screen if you're on your laptop here, so we can get kind of the audience to see what's going on.
Well, the audience is going to have to try. I'm not looking up on my computer right now.
Okay.
But the bid ask, I mean, the ask price is $35.60, and the bid's 40. Oh no, sorry, I flipped that. The bid's 35.60. The ask is 40. That's super wide. Right. And so obviously the number one concern right there is like, what can I short at? And how is the liquidity? What's that spread going to be when I try and close the position? Is it going to be anything tight enough for me to even close profitably? That's the skepticism I come into. But that being said, like, the base price of this thing before this pop was like 5 cents, and it's right now $38. So
even if it drops, even if it holds a ridiculous 5,000% above where it started at $5, you would make an ass load of money.
Yes, this is true,
and it's almost a lock, right?
Yeah, I want to think so. So, it's weird because you don't come across these opportunities often. You know what I mean?
Right.
They don't happen often. They just happen randomly. And I want to think that everything about this plan is not stupid, but it's just the fact that I've never done it before. It's like, I don't want to toss $3,000 at this thing, whatever, and have some sort of thing, some sort of weird anomaly that exists only in the penny stock world or in the shorted stock world, some sort of weird detail that I don't know about, some rule, some anomaly, totally just ruin the whole trade just because I didn't know about it, you know?
Right. And to educate the audience, if you don't know, when you short a stock and you don't do it via put options or anything like that, your ability to lose money is infinite, right?
Yeah.
So this is why Eric is so damn cautious right here.
Well, right, because now, I'm wondering, like, cool, what if I went in and I shorted it? So, and again, I guess on the educational tip, that's me borrowing shares from the brokerage and selling them right away and keep it and palming the cash right away.
Right.
So, and the idea is it goes lower and I buy it back for less and I keep the difference. Great. But what if a bunch of people are now just hearing about this story? You know, it's getting around Twitter, it's getting around whatever, you know, it's getting around all the different, you know, whatever market outlets, and they're just hearing about it now, and they jump in on tomorrow. and it shoots up tomorrow, because then that's what you're talking about. Because then I have no idea when it's going to come down, and I'm going to be paying interest on that, until it does. So I
didn't know that you could lose money infinitely. Sure.
Oh yeah. I mean,
yes.
Yeah. I mean, look, okay. So the stock's at $38 right now.
Mm-hmm.
So let's just say I sold 100 shares at $38 and palmed $3,870. Well, that's pretty cool. Unless the stock goes back up to 70. Now my option to to close that trade, I would have to buy it back for higher. And that goes directly against our classic mantra of buy low, sell high.
Right.
Now I'd be selling low, buying high.
So what we need to do is follow this throughout the week.
Yeah.
And we will, on our Sunday update, we'll see where the stock goes and how we'll take this as a learning opportunity to see what we could have done. We'll research if there are anomalies where we'd lose tons of money other than the stock running away again, and we'll update everybody on our findings so we could take advantage of the next time we have an opportunity like this, right?
And the other thing we can do is very easily through TD Ameritrade, I can just log into my a paper trading account and just paper trade.
Beautiful. Let's do it.
That'll be fun.
Absolutely. So on to the next bit. If we're done with Signal, I don't know if you have another piece of news, Eric. All right. So let me share my screen because I have quite the crypto update for the day. Because for anyone that's watching this, not day of, which is currently it's the 11th, I believe, Monday, January 11th, 2021. Bitcoin has dropped from an all-time high of $40,000 all the way down to we hit 3270 today, and everybody is panicking. So the first news I wanted to share right here, this is off of Cointelegraph, who, I mean, there are some skeptical articles on here, but they are a pretty solid source of information. So basically, this is institutional crypto fund inflows have dropped by 97% in these last 3 weeks. Anybody who's been following the Bitcoin rocket ship recently knows that since Christmas, where it was right around $24,000, we've ridden all the way up to the 40K all-time high. So what this article basically outlines in a very short synopsis is that the past 3 weeks, we've seen almost no investment from the big boys, the institutions, mutual funds, ETFs, private companies, basically haven't been touching since Christmas holiday. So what we've seen has all been retail investing, right? Now, this tells us something, and it tells us that A, it's people FOMOing into the price, right? B, it's generally people with weak hands. Institutions don't have weak hands. They buy something that they see is going to rise for the next few years, and they don't FOMO into price. So with this, if you think the 97% drop with this meteoric rise, everybody's still sitting pretty, all the institutions are still sitting pretty well above their investment, right? Right around the $24,000 mark, if they timed it at the worst possible time, which was Christmas, which they were closed anyway. So I don't know how much, I still have to learn how much institutions are buying off regular market hours compared to regular stock market, right? Who knows if they're buying between that 9 to 5 time frame or if they're going 24/7. We don't really have the data on that right now. But basically, this big sell-off that we've seen of around 24% has been also the weak hands that have FOMO'd in, right? Which again is not surprising. We've seen this happen before. We've seen this happen in 2017. So what I want to do is I will show you today's chart, right? This is what we're looking at. Now, this right here has been a pretty significant drop, and everybody's saying, oh, this is it. The bubble has popped. This is 2017 all over again. Let's pull our money. We made some profit from 24,000 onward. This thing's going to the floor. If you look at 2017, I believe we are right here. And here's why. So if we look at the percentage drop, from the all-time high there, we're right about 24%, right? If we look at the percentage drop from the all-time high, we're at 40% roughly, right? If we look at now today's, come on, go back up. And we look at the profit drop, we are looking right around 24, 26%. And this is all retail again. So in comparison to 2017, this small drop, I still believe we have a very similar rise up from this 30K level all the way to another 50% upwards, right? And this shows, if you look at the parabolic charts, right, between the yearly trends, which is pretty damn on point so far for all of the Bitcoin halvings so far. That means, God damn it. That means today's price, or the potential future price, is, we go 50%. We're looking right around a $4,600 Bitcoin within the next couple weeks, months. Now you add in the fact that we've had very heavy buys here, and the fact, and I apologize to the audience, I couldn't find the article again. I should have saved it. And the fact that we found out that right here, the greatest percentage of buyers, over 80% of buys in this range today, was by wallets that contained more than 1,000 Bitcoin. We know institutions buying here, okay, right?
Yeah.
Nobody has that much money that's retail. So again, institutions are not weak hands. They see this as an opportunity to get in at bargain basement prices yet again. And I think at least because institutions are buying, again, we have a liquidity crisis here. Institutions are buying more Bitcoin than can be mined every single day. Just Grayscale alone buys more Bitcoin every single day than can be possibly mined. I think this level right here within the next month to month and a half is an inevitability.
So
and that's it.
Holly, can I ask you a question?
Yes.
So what is what would you say is the significance between the parallel of the first drop that you noted, the 24% drop in 2017, and this one? Why is the 20? Why are they parallel? Why do they seem to be?
I saw this coming. I know.
It's parallel.
He hates the pattern recognition.
I know.
So you're not a big fractals fan.
But when it comes, yeah. But the retail versus institutional buying is where I'm like, okay,
right.
Sure.
When it comes to Bitcoin and cryptocurrencies, I believe, and I've had pretty good success at looking at fractals, simply because it shows again, because this is retail, this is pure psychology. And humans they don't really change that much, right? Our psychology, when it comes to price, when it comes to losing money, it doesn't change that much. It does change when the big boys are involved. But this entire run up and this entire sell off since that 24,000 mark from the article that I showed you basically shows that this was purely retail driven, both the buy up and the sell down. So now that we see A, the big money getting in again, and B, those same people are going to FOMO in when the price starts rising again. That's why I think this is similar to that past. Basically, it was all retail in that past. No institutions were buying. This is all retail right now. That's why I think this parallel can be drawn, if that makes sense.
So do you think that for those listeners who aren't familiar with fractals, with what fractals are, you want to give them a quick
Yeah, fractals is just comparing past chart history with recent chart history, and you could do actually across. It could be across markets, it could be different stocks, it could be whatever. But if you see similarities in price ranges and price corrections in this instance, if you see similarities, it's basically stocks are human psychology, right?
Right, sure.
That's purely what it is. People buying and selling based off generally what they're feeling. What they think the chart is going to do is the slightly more advanced side of those things. And then also where they've risked all the risks that they put in recently.
So, Paulie, are you familiar with Elliott wave?
I am, but I'm not very good at charting with them.
Oh, I'm horrible at it.
Okay.
If you've ever, have you ever read How to Chart It?
I haven't. No, I have not.
I don't know if I have a good comparison for it, but when you read and look, anyone listening to this, if you understand Elliott wave, and I might just sound like an idiot who just doesn't understand it, but I'll tell you what, if you guys want a fun ride, just try and read all the different rules and stipulations for charting Elliott wave. It's like, are you guys Parks and Rec fans?
Mm-hmm.
Dude, it's like the instructions for fucking Cones of Dunshire. Like, there are so many qualifications. Like, if it goes like this and then it goes this, but not quite far enough. But if it does this, at the second wave, then it's all canceled. If it gets to the third wave, but it's not not this much above the second wave, it's canceled. It's off. And like every peak and valley could be God knows what wave. That being said, Elliott wave, for anyone who isn't familiar with it, is based strictly 100% off of psychology. It's basically each wave moving in one direction or the other essentially is supposed to reflect a certain stage of human psychology. And you should theoretically, if you ever find a proper Elliott wave pattern, it's supposed to be a really strong indicator of how and when to trade a stock.
I mean, that sounds interesting. If it goes through, because I've seen it charted where it's A, B, C, D.
Yeah.
You know, and if it gets to C and it's still followed A, B, like up to that point, or if it gets to E and it's followed A, B, C, and D.
Yeah.
It's like passing a bunch of different checkpoints.
See, I'm much more inclined to think, like, when I asked about the 24% drop, like, I'm much more inclined to think that was some sort of like quant algo situation where, yes, again, we know in 2017, like institutional involvement was not nearly where it was now, but it leads me to believe that the real traders, whether those are advanced retail traders or those are institutions, are, if you see those similar percentages line up over and over again, that just makes me think that's just a computer algorithm sort of identifying, like, cool, when it hits 25% drop, we're buying.
Right. And that would make sense if it wasn't for basically the news that I read today, which saying, they were pretty much out of it at this point, and they were just waiting for a correction in very, very large wallets.
Mm-hmm.
Now, moving forwards, I think we could assume that there are going to be some quants and algorithms and whatnot that are changing the price. And that's personally one of the reasons why I don't think I've been doing as well on this recent bull run as I have in the past, because I'm not a supremely advanced trader, and I don't know the insides like to algorithms and quants and stuff like that. But I still think today was almost, I'd say 80% fueled by retail.
Well, I hope the little well, what appears to be some sort of support or bottom is actually, because I bought plenty more today.
Yeah,
That's what I'm curious.
Yeah.
Yep. All right, boys. So let's wrap this up.
Great. Another successful episode of the Cash Furnace.
Thank you for tuning in. If you like what you see and you want to keep the news coming, make sure to like, subscribe, and comment. Help us run up in the YouTube algorithm, and let's make some money.